Have President Trump's tax cuts worked as planned? President Trump signed in the Tax Cuts and Jobs Act, the TCJA, into law on the 22nd of December 2017. And that act brought sweeping changes in one of the largest overhauls of the US tax code in more than 3 decades. The law created a single corporate rate of tax of 21%, cutting the corporate rate permanently, and it also reduced individuals' tax rates temporarily. Of course, for the wealthy, the banks and other corporations, the reform package was considered a lopsided victory, with very significant and permanent tax cuts to corporate profits and investment income and estate tax, etc. Now, when Donald Trump first proposed these tax cuts, they were sold as a way to make America great again. The trickle-down theory of economics, we were told, would energise or re-energise US industry. Companies would build new factories, they'd hire more workers, they'd buy new equipment, they'd get more efficient, they'd invest in more research, and they would expand. In short, it would be a game changer for US business, with a massive amount of investment coming back into America, and companies would obviously flourish as a result. After 2 years, the US economy is in fact doing better than many had predicted. Dividends, which are the cash payments to shareholders, are up. Capital expenditure, in other words, the reinvesting of money back into businesses, is up. And also, research and development in business is also up. But wages generally have increased only marginally. And the sad fact is that the largest corporations have used an average of 60% of their tax windfall to buy back their own shares. Now, why is that significant? Well, share buybacks have the effect of pumping up the share price. And this in turn drives up growth and figures, all without building anything or without employing anyone. This type of financial engineering is very popular with executives. It allows them to get higher bonuses because most of their compensation packages are tied to the company's share price. Now, the company buyback of shares is actually legal as long as it meets certain conditions, which are public disclosure requirements, and obviously there are limits on the number of shares that may be repurchased. The sad thing is, though, that for some years the US has had weak capital investment and its productivity growth has been less than 1% per annum. The US economy really needs both to increase. And the fear now is that the US may have failed to grasp a once-off opportunity to improve them both.